who might be able to make sense of the merry-go-round, explain what's happening with the markets and what he thinks perhaps the customers should do. Interest.co.nz editor Bernard Hickey is in the studio as well. Welcome.
Hello.
So, I mean, what Emily and Jock are saying, that there's sense in that, isn't there? That sometimes it is too hard for people and it becomes such a focus to make sense of the numbers. But it's something we should be thinking about.
Yeah, I've been hearing too about people having mortgage stress, wondering whether to stay floating or go fixed. And there is this element of national obsession, which is great from our point of view. A lot of people are looking at our side. But you're right, because New Zealanders have fallen in love with property. They've leveraged themselves up to the eyeballs in the last 5 years. It has been the thing that changed the nation in terms of how much debt we've got personally, how much we have to pay out each month in mortgage fees. And so it does matter for the finances of most people in New Zealand. And it's something where you can too take a punt. And people think of taking a financial punt as investing in the stock market. Well, now you're taking a punt when you decide whether to float or fix, because you're making a judgment about interest rates.
So to float or to fix, that's the question. I mean, we're told, Alan Bollard seems to be signalling that hang in there if you're floating.
Yeah, yesterday he came out with a very unusual statement. He said that long-term interest rates had gone higher than he'd expected. And this is a very unusual thing for a Reserve Bank governor to say. And happened after the wholesale interest rates rose quite sharply in the last couple of weeks, maybe 3 weeks or so, because, ironically, everyone rushed in to fix their mortgage rates. And when that happens, the banks have to go into the wholesale markets and essentially buy the money for the people who are borrowing it from them. And so you had a case of everyone rushing for the door and breaking the door frame.
But the era of cheap money, as you sort of mentioned, the era of cheap money from overseas is well over.
That's right. And
but Bernard, is Bollard making this unusual statement totally and independently off his own bat? Or is he being given a little bit of a nudge, wink to sort of, say something and try and keep the peasants happy for a wee while longer?
Across the road of the beehive. Yeah, I don't think so. I think he is independent and he is worried about it, because when mortgage rates go up, homeowners get nervous and stop spending and the economy slows down. The question of to float or to fix, luckily, it's not a digital thing. You don't have to do one or the other. You can actually do both.
Yeah.
And there's a lot of people who choose to do that. It all depends on your personal situation. Now, if you know you're about to win lotto, or you've got an inheritance coming, or you've got a bonus or a redundancy coming, and you want to pay off your debt,
or you're extremely well organised,
or you're a tragic freelancer like me. You don't know where the next money's coming from, but
and you want to
there, you hope.
Get rid of that straitjacket, which debt is. It's like a straitjacket, a bag over your head, and a chain to the wall all at the same time. You want to get rid of that, then the best way to do it is to pay it off as you go. And you can do that with a floating rate. But if you know you've got the mortgage for quite some time, 10, 20 years, and you're going to stay in that house for, at least another couple of years.
So you've just bought one, for example, and you're staring down the barrel of a decade.
That's right. Then you can do both. You can float some and fix some. But if you are a fixer and you want to float, you want to fix some, then now is a good time to fix, because rates are rising. And unfortunately, Alan Bollard can't do much about it. That's because those long-term rates are a result of what's happening in the market and actually what's happening overseas. So when you hear Barack Obama jump up and say, I'm going to spend another $1 trillion bailing out some banks or car makers or someone else who's got great lobbyists, then he will actually push up interest rates globally, and that affects us here. And it's the same when reserve banks decide to print money. I mean, that's what's happening in the UK and the US at the moment. The Federal Reserve and the Bank of England are literally printing money, although in this day and age you don't print it, you just Control-C, Control-V. It's just another tab in your spreadsheet and away you go. And that's what's pushing up those interest rates globally and therefore here. And so I think for those people who are needing to fix, wanting to fix at least part of their mortgage, then now's the time to do it. Remember, only 3 weeks ago, ASB, for example, were offering 5.95% for 5 years. Their rate now is over 7.5%. So if you've got a big mortgage, a couple of $100,000, that's a lot of money every month.
A big difference.
I mean, you can see where the stress comes in for most people, because we're all, hearing this doom and gloom constantly about the global financial situation, and it's making a difference in all of our lives now. I would say. So when interest rates go down, that does seem like a little bit of blue sky. It seems like a small break. So yeah, I'm not surprised that. Should we
be forming support groups for mortgage stress?
Oh, perhaps. Well,
we'll just become renters. I mean, I really think there's, renting is a noble option, and it's a weird national fixation that we've got about home owning.
Yeah. But surely it's the quarter acre paradise.
Well,
the idea
that's right.
It's something to aspire to.
It's long established, but there are other, communities and cultures where there's absolutely nothing wrong with lifelong renting and doing other things with your income.
And Paris is always one of the cities that springs to mind, some of those European cities like Paris or Berlin. Can I ask you, Bernard Hickey, too, there's another Reserve Bank statement due out at the end of the month. Can I ask you to look into your crystal ball and sort of, what's he going to say?
On April the 30th, Alan Bollard will come out with his regular statement on the official cash rate. He's likely to cut that from 3% to maybe 2.75 or even 2.5%. And he's seeing the global economy get worse, and that have come through to New Zealand. We've got very poor business confidence, and he needs to keep cutting the rates, particularly now the New Zealand dollar has jumped up a bit, and we've seen these long-term interest rates jump up. He has a little bit extra work to do, and will probably do it on April the 30th. Now, what does that mean for people with mortgages? If you've got a floating rate mortgage, it might actually drop a little bit. So you've got this bizarre situation where the long-term mortgages are rising, but the short-term ones are actually dropping, steepening of the yield curve for interest rate anorex like me. And that is very, very interesting. So if you go both ways, you can have it both ways.
Well, that seems to be the most constructive thing to come out of the discussion, the fact that it isn't an either-or proposition. You can have your cake and eat it in that regard. Right. Yeah. Long-term?
Long-term, I think interest rates are going to rise long-term globally, simply because Barack Obama and Gordon Brown, right now actually, are talking about spending and borrowing their way out of a problem caused by too much spending and too much borrowing. I don't think it'll work. I think it'll just create inflation long run, and it's a massive act of economic denial of the fact that we borrowed too much, we spent too much. Now we have to spend some time in a recession paying back debt and rebuilding the economy to be more productive rather than more consumptive.
How much of that rebuilding will rely upon savings, or do savings not come into this equation at all?
Well, they don't in New Zealand, do they? Because we're always being told we're terrible savers.
And we are. And we need to be better. And that's why, actually, I think interest rates need to go up because we need to improve our saving. And part of the problem the last couple of weeks when everyone rushed to fix was they rushed onto the markets to fix, and the banks couldn't find anyone to lend the money to. And that's why you need to put up interest rates. It's a brilliant automatic stabilizer for the economy. When your interest rates go up, more people save, there's more money around, and things happen. So I actually think Alan Bollard should stay out of this, let the market do its thing at the long term, and stick to those short-term interest rates, which is what he controls, and do the best he can. And New Zealanders should understand that we borrowed our way into a big hole. Now we're going to have to slowly dig our way out by saving more and spending less.
Well, hopefully Alan Bollard is listening, and it is at least comforting to have a place in a continuum, Bernard Hickey. So thank you very much for that. That is Bernard Hickey from interest.co.nz.